Welcome, curious minds, to another deep dive. Today, we're tackling something massive, truly global, but maybe a bit invisible.
That seems intriguing. What do we got?
We're pulling back the curtain on marine insurance. You know, the thing that protects ships, cargo, everything moving across the ocean.
Yes, absolutely fundamental. It's that financial safety net, really, that allows, well, trillions of dollars in goods to get from A to B.
Yeah.
Your coffee, your phone parts.
Exactly. It underpins so much of the global economy, but you don't often think about it directly.
You really don't. But without it, the risks involved in shipping weather, accidents, even piracy or geopolitical issues would just be too high. It wouldn't be economically viable for a lot of trade.
Right. So our mission today is to give you a shortcut. We've got this detailed forecast report, Global Marine Insurance Market 2021-2033, and we're going to pull out the key financial nuggets.
So we're looking at projected growth, premiums, market size, that sort of thing.
Precisely. Growth across regions, key countries, basically where the market's heading and what that tells us about global trade itself.
Okay, sounds good. So where do we start? The big picture.
Let's jump right in. Globally, the market size, measured by total premiums, was already pretty hefty in 2021. It stood at $27,939.2 million.
Almost $28 billion.
And the projection. By 2025, it's expected to hit $32,668.6 million.
So a decent jump in just a few years.
But then it really picks up steam. The forecast for 2033 is $44,664.5 million.
Wow, okay, $44.6 billion. That's quite an increase from $28 billion.
It really is. It works out to a compound annual growth rate, a CAGR, of nearly 4%, 3.987% to be exact.
Almost 4% year on year globally. That signals, well, quite a lot of confidence in the growth of maritime trade, doesn't it?
That's what I was thinking. More goods moving, maybe higher value goods, more complex journeys needing cover.
Absolutely.
Yeah.
It suggests that despite all the talk of, global challenges, the fundamental movement of stuff by sea is expected to keep growing, maybe even accelerating, and needing more insurance.
So with that overall growth laid out, where are the main engines? Which parts of the world are really driving this expansion?
Well, the data points very, very clearly to one region in particular, Asia Pacific.
Okay. Leading the charge.
Oh, absolutely. It's not just the biggest market now, it's also growing the fastest.
Yeah.
In 2021, the total premium volume there was $11,119.8 million.
So over $11 billion already back then.
Right. By 2025, that's projected to be $13,070.7 million. And then the jump to 2033 is pretty impressive, $18,656.4 million.
18.6 billion. Just in Asia Pacific. That's enormous. It really reflects its role as the sort of global manufacturing hub,
And
right?
consumption hub, too. It's both sides of the equation. So let's break that down a bit.
Yeah, which countries are the big players within APAC?
Well, no surprise, China is a major driver. It started at $3,439.36 million in 2021.
3.4 billion.
Yep. That goes up to $3,917.29 million by 2025, and the forecast for 2033 is $5,430.87 million.
Over 5.4 billion just for China.
Okay.
Who else is significant?
Japan is another heavyweight, $2,547.55 million in 21, heading towards $2,882.09 million in 25, and then almost $4 billion, $3,990.6 million by 33.
Right. And India. We hear a lot about its growth potential.
And the numbers back that up here. India shows really strong growth. It was $1,804.74 million in 21.
1.8 billion.
Climbs to $2,194.57 million by 25, and then a really significant jump to $3,367.48 million by 2033.
Wow, nearly doubling its market size over the period.
Pretty much. Those three alone are a huge chunk of the APAC market.
Definitely. What about other key places like, say, South Korea or Singapore?
Good question. South Korea, major industrial and shipping nation, is projected to grow from around $800 million, $799.51 million, to $909 million, eventually hitting $1,199.6 million, so about $1.2 billion.
Oh.
In Singapore, the critical transshipment hub, it goes from $384.7 million up to $464 million, and then quite a strong rise to $742.5 million by 2033.
That makes sense given its role.
It does. And then you have the broader Southeast Asia region grouped together. That's also showing big growth. $1,056 million up to $1,253 million, heading towards nearly $2 billion, $1,964.5 million.
And you mentioned a rest of APAC's category.
Yeah, and that's actually quite interesting. It lumps together several other markets, but collectively, their growth is notable. From about $506 million in 21 up to nearly $800 million, $796 million in 25, and then projected to reach $1,227 million by 2033.
So growth is pretty widespread across the region, not just concentrated in 2 or 3 countries.
Exactly. It's a very dynamic picture in Asia-Pacific.
Okay, so APAC is clearly the leader, setting a very high bar. Let's pivot. How does North America stack up? Still a major force.
Oh, definitely. North America holds a very strong second position. Its total premium volume was 8,074.44 million back in 2021.
8 billion. Okay.
That's forecast to grow to 9,372.62 million by 2025, and then reach 12,291.7 million by 2033. Solid, steady growth.
12.3 billion by 2033, still very significant, and I assume the U.S. dominates within that region.
Absolutely. The U.S. accounts for the vast majority. It starts at 6,520.51 million in 21.
6.5 billion.
Goes up to $7,538.4 million by 25, and then lands at 9,731.33 million by 2033. Almost $10 billion just in the U.S. market.
That really underscores the scale of U.S. trade. What about Canada and Mexico?
Canada shows consistent growth, too. Just under $1 billion, $994.77 million in 21, growing to $1,177 million, and projected to hit $1,730.67 million, so $1.7 billion.
Okay.
And Mexico also expanding steadily, from about $560 million, $559.558 million, to $657 million, and then reaching $829.689 million by 2033.
Okay, let's cross the Atlantic. Europe. A more mature market, perhaps, but very diverse. What's its contribution?
Europe is definitely significant. Its total premiums were $5,308.45 million in 2021.
5.3 billion.
Projected to rise to $6,138.43 million by 2025, and then hit $8,003.89 million by 2033.
8 billion by 2033, so still substantial growth, even if maybe not the explosive rate of APAC.
Exactly. It reflects Europe's enduring importance in global trade, specialized shipping, things like that.
Which countries stand out in Europe? Is it the traditional maritime nations?
Well, yes and no. The UK, with its history, grows from about $573 million, $572.782 million, to $649 million, reaching $787.5 million.
Okay.
Germany, the industrial engine, starts stronger at $871.6 million, goes to just over $1 billion, $1,111 million, and reaches $1,230.2 million.
1.2 billion, interesting.
France is actually very similar to Germany in the projections, starting at $745.8 million, growing to $871 million, and ending up at $1,230.5 million.
Right alongside Germany, then. Any others?
Yeah. Italy shows good growth from around $410 million, $409.8 million to $482 million, reaching $654 million. Russia also has a significant market, $705 million growing to $807 million, projected to hit just over $1 billion, so $1,006 million.
Yeah. Spain.
Spain, too, yeah. $378 million up to $430 million, landing around $522 million.
Okay, so several key players.
But what's quite striking, similar to APAC, is the rest of Europe category. It's a big contributor and shows strong growth. Starts at $11,113 million.
Over $1 billion already.
Yeah. Grows to $1,329 million by 25, and then a pretty impressive $1,943 million by 2033.
Nearly $2 billion from the rest of Europe. That does suggest, like you said, a broadening base for maritime activity beyond the historical centers.
It really does. A very interesting trend there.
Okay, moving south now. South America. We often hear about it as an emerging market. Do the marine insurance figures reflect that?
They certainly show a strong upward trend. It's definitely emerging in this space. The total premium volume goes from $1,843.99 million in 2021.
1.8 billion.
Up to $2,224.73 million by 2025, and then projected to reach $3,291.78 million by 2033.
So crossing the $3 billion mark, that's quite robust growth, probably linked to commodity exports.
Very likely. Increased regional trade as well, perhaps. Brazil naturally leads the way there. The biggest economy, yeah. It starts at $581.9 million, grows to nearly $700 million, $699.9 million, and is projected to hit just over $1 billion, $1,003.4 million by 2033.
$1 billion market in Brazil. Okay.
Yeah. Argentina also shows solid growth, $241 million to $293 million, and then forecasted at $459 million.
Any others showing notable growth?
Colombia is expanding nicely too. $154 million to $187 million, expected to reach $292 million. Peru and Chile, while smaller markets, also show consistent increases. Peru goes from $77 million to $92 million, then $115 million.
Okay.
And Chile from $53 million to about $64 million, reaching $79 million by 2033.
Absolutely, and the market reflects that with steady, consistent growth. It expands from 1,089.63 million in 21
Just over a billion?
to 1,205.47 million by 25, and then forecast to reach 1,487.33 million by 2033.
Almost 1.5 billion. And the key players there, Saudi Arabia. Saudi Arabia is the largest, yes. Growing from about $394 million, $393.79 million, to $433 million, and reaching $523 million.
Okay.
You also see reliable growth from others like Turkey, $140 million going to $154 million, then $182 million. The UAE, $110 million to $123 million, then $165 million. Egypt, $96 million to $107 million, hitting $138 million. And Qatar, around $88 million, up to $96 million, then $132 million.
So steady growth across several key nations in the Middle East.
Reflecting that ongoing strategic importance and probably infrastructure development too.
Makes sense. Africa's market is projected for quite significant expansion, relatively speaking. It starts at $502.9 million in 2020,
$500 million.
grows to $656.6 million by 2025, and then is forecasted to reach $933.489 million by 2033.
So nearly doubling over the period, almost hitting $1 billion. That suggests increasing trade integration. That's certainly what it points towards. More economic activity, greater connection to global supply chains. Nigeria is a key contributor, expected to grow from $107 million to $139 million, reaching $193 million. Okay. And South Africa, a major regional economy, shows strong growth too, from $172.8 million to $225 million, and projected to hit $311.9 million by 2033.
Interesting. So real signs of a burgeoning maritime trade sector across Africa as well.
Absolutely. The growth is continent-wide, even if starting from a smaller base.
Okay, so let's try and wrap this up. To recap this deep dive, what we've seen is a global marine insurance market that's not just large, but consistently growing, robustly growing, actually.
That's right. And while Asia-Pacific is clearly, the powerhouse in terms of both size and speed of growth.
An nearly $19 billion market by 2033.
Exactly. But the crucial point is we're seeing substantial, solid growth pretty much everywhere else, too.
Yeah.
North America, Europe, South America, the Middle East, Africa, they're all expanding.
And these aren't just numbers on a page, are they? Connecting this back to the real world, this growth in insurance premiums, it directly reflects expectations about, well, the sheer amount and value of stuff being shipped globally.
Precisely. It underscores how vital this insurance is for keeping global trade flowing. It's the mechanism that manages the inherent risks, making international commerce possible on the scale we see today. It's that, as you called it, invisible safety net.
And a safety net that seems to be getting bigger and stronger, suggesting more activity, more value, and maybe more complexity on the world's oceans?
Definitely more complexity. Modern supply chains are intricate. The assets involved huge container ships. Specialized vessels are incredibly valuable. The risks are evolving, too, so that growing premium volume reflects all of that.
It really does paint a picture of our interconnected world. So maybe a final thought for you, our listener, to mull over. Given these really significant growth projections pretty much across the board, what does this tell you about the future shape of global trade? And maybe more importantly, how might these trends in marine insurance influence decisions for businesses and even for nations that depend so heavily on moving goods by sea?
That's a great question to ponder. The rising tide of premiums certainly suggests a rising tide of global commerce, but also perhaps rising complexities and risks to navigate.
Okay, so when you think about global shipping, it's this massive, incredibly complex network, right?
Absolutely immense.
It moves literally trillions of dollars in goods across the oceans, pretty much silently every single day.
Kind of invisible, but completely essential to our modern economy.
Exactly. And holding it all together, making sure it actually works, is marine insurance. So today, we're doing a deep dive into exactly that, the global marine insurance market.
Sounds good.
Our mission really is to unpack what's driving this vital industry, what challenges it's up against, and maybe get a sense of where it's heading.
And we're drawing on some solid research for this.
Yes, we're leaning heavily on the insights from Cognitive Market Research's report. It's called Global Marine Insurance, Trends and Future Growth.
Okay.
So for you listening, you're basically about to get a shortcut to understanding a really critical and actually quite dynamic sector.
Yeah, it's genuinely remarkable how foundational marine insurance is, for the whole global economy.
It seems niche, but it isn't really.
No. Not at all. It's the bedrock, maybe the invisible bedrock, that lets global commerce actually happen with some degree of safety and predictability.
Right.
And this report, it really puts numbers on it. We're talking nearly, what, 28 billion US dollars back in 2021,
Wow.
projected to hit over $32 billion by 2025, and then a significant jump to $44.6 billion by 2033.
Okay, so steady growth.
Yeah, growing at a compound annual growth rate, a CAGR, of almost 4%, 3.987% to be exact.
Which tells you.
It tells you just how much this seemingly specialized market
Yeah.
underpins, well, pretty much everything we rely on that moves across the water.
That is quite an impressive growth path for something most people probably never give a second thought to.
True.
So, okay, let's dig into what's actually pushing that growth. The report flags the incorporation of Internet of Things technology, IoT, as a major driver.
Yes, IoT.
How exactly is that changing the game for marine insurance? What does the report say about, how it's being used?
Well, fundamentally, it's about getting much, much better visibility and precision. But, there are always hurdles integrating new tech with older ways of doing things.
Sure.
So the report details things like telematics, GPS sensors, even monitors for temperature and humidity being put right into the ships and the cargo containers themselves.
Okay, so real-time data streams.
Exactly. For the insurers, this translates into real-time tracking, which means they can do incredibly precise risk assessments, like really granular.
So they can tailor the price better.
Precisely. They can customize premiums based on actual dynamic data, not just historical averages. But what's really transformative, I think,
Go on.
is the shift it enables, moving away from just insuring against loss towards proactively preventing loss.
Ah, right. That's a big difference.
Huge. It's not just about saving money on claims. It changes the insurer's whole role. They become more like an active risk management partner, not just a, payout mechanism after something goes wrong.
That makes a lot of sense. So this incredibly detailed data, it fundamentally changes the risk model.
It does.
Better predictions, and like you said, actually stopping losses before they happen.
Exactly right.
Yeah.
This real-time data, you combine it with predictive analytics, which IoT enables, and you start to see a significant drop in how often claims happen. Plus, it makes the whole shipping supply chain more efficient operationally.
So everyone benefits.
Pretty much.
Yeah.
And as more companies see that value, they invest more in IoT for marine uses, which then just accelerates the demand for this kind of tech-enabled insurance globally.
Yeah.
Sort of a positive feedback loop.
A virtuous cycle, yeah. Okay, so beyond the tech, which is fascinating, the report also talks about another, maybe more fundamental driver.
Okay.
The simple, relentless expansion of global trade itself. Now that seems obvious, right? More trade, more insurance needed.
It is direct, yes, but there's complexity there too.
What kind of nuances does the research point out?
Well, the analysis notes that it's not just more trade, it's different trade. Trade routes are diversifying, shipping volumes internationally keep climbing. And all of that naturally requires robust insurance to cover all the risks involved in moving things around the planet.
Makes sense.
But the key thing now is how interconnected supply chains are. This creates a much higher demand for insurance that's really tailored, sensitive to specific locations or legs of a journey.
So like a single shipment might face different risks as it moves.
Precisely. Think about a complex journey, multiple stops, different modes of transport, maybe crossing through different geopolitical zones. Each stage has its own unique and possibly changing risks. Standard policies might not cut it anymore.
And I guess technology helps manage that complexity too. Is it the same IoT tech or something else?
Oh, absolutely. IoT plays a role, but so do things like satellite tracking, real-time cargo analytics. These tools really boost the ability of insurers to underwrite accurately and manage claims efficiently.
So tech helps them offer those tailored products.
Exactly. As businesses push into new markets, facing potentially new or unusual risks, the marine insurance market grows because it provides that essential protection, that confidence needed for cross-border expansion.
Right. Okay. But of course, no industry is without its headwinds, its challenges.
True.
What does the report identify as the main constraints or restraints on this growth? Are we talking specific big disasters or more like ongoing issues?
It's actually more about the ongoing unpredictable factors. The primary challenge highlighted is Fluctuations and sudden increments. Systemic uncertainty, really.
Meaning?
Well, the report mentions things like volatile weather patterns, think bigger storms more often. Also, unpredictable geopolitical events, conflicts or trade disputes, and just general market instability.
Okay, things that can cause sudden shocks.
Exactly. These factors can lead to abrupt spikes in insurance claims or sudden jumps in premiums needed to cover the increased risk. And that really messes with financial planning and profitability for the insurers.
I can imagine, like the Suez Canal blockage or major hurricanes.
Those are perfect examples. They aren't just isolated incidents, they send ripples through the system. Maritime disasters, or even just significant slowdowns in trade like we've seen, put huge pressure on insurers' operating margins and crank up their overall risk exposure.
So it's not just managing the risk of one ship sinking, but these massive systemic risks that can hit everyone.
Precisely. And the research stresses that to cope with this dynamic, volatile environment, insurers really need, well, several things.
Like what?
Robust risk management frameworks, obviously. Diversified portfolios so they're not overexposed in one area. Technological resilience, using analytics to get ahead of trends. And critically strong financial buffers to absorb those shocks. It's about building deep resilience.
Okay, that makes sense. Let's shift gears a bit and look forward. Beyond the current drivers and restraints, how is the industry innovating? How is it adapting?
Right.
The report mentions a lot about digitization and what it calls intelligent risk management. What does that actually look like on the ground? Are different technologies working together here?
Yeah, this is where things get really interesting, I think. It's about the convergence of several key technologies.
Okay.
We're talking artificial intelligence, AI, blockchain technology, and again, IoT. They're not working in isolation. They're being integrated.
How so?
So IoT sensors, like we discussed, provide that incredibly detailed, real-time view of what's happening with ships and cargo.
The raw data.
Exactly. Then AI comes in. It analyzes that data stream to spot anomalies, predict potential risks, often before a human could be a terror ever. Maybe a piece of equipment is likely to fail, or cargo conditions are drifting out of spec.
Okay, predictive power.
Yes. And then blockchain adds a really crucial layer, particularly around transparency and security. You can create secure, tamper-proof records of policies, track ownership, and really streamline how contracts are managed, especially when multiple parties are involved.
Right, simplifying the paperwork and trust aspects.
That's a highly integrated system, aiming for efficiency and accuracy.
That sounds incredibly beneficial for the insurers, more efficiency, better risk assessment. But what about the policyholder? The business shipping the goods. How does all this tech help them specifically?
That's a key question. For the policyholders, one of the big wins is speed and transparency, especially with claims. Automation driven by this tech can drastically cut down claim turnaround times.
Which matters a lot when cash flow is tied up.
Absolutely. And it's not just about speed, it builds trust. Claims will be handled quickly and fairly based on clear data, that provides a huge amount of confidence.
Yeah.
So ultimately, these technologies make the insurers more agile, more responsive in a really competitive and unpredictable market. And that agility translates into better service and more suitable risk solutions for their clients. It should be a win-win.
Okay, interesting. Let's move to another key trend the report highlights. This rising demand for more personalized coverage, customized solutions. Why are businesses apparently moving away from the sort of traditional, maybe one-size-fits-all policies? What's driving that shift?
Well, the analysis ties this directly back to what we talked about earlier. The increasing complexity and, frankly, volatility of global supply chains, especially since COVID-19 shook things up.
Things are just less predictable.
Exactly. So businesses feel they just can't rely on a generic policy anymore. They're actively looking for insurance plans that are more modular, more flexible, plans they can adapt to cover the specific risks of a particular voyage or a unique type of cargo or the specific dangers in a certain region.
So they want to pay for exactly the cover they need when they need it.
Pretty much. It's a direct response to that feeling of unpredictability in global trade.
So insurers are having to get really creative then, really flexible with their offerings.
They absolutely are. And the report shows they're responding. You're seeing things like usage-based policies emerge, literally paying based on mileage or time at sea, or short-term voyage insurance just covering a single trip.
Okay.
And even embedded insurance solutions offered directly through digital freight booking platforms. So insurance just becomes a seamless part of the whole shipping transaction.
Making it easier to get the right cover.
Exactly. This whole shift towards flexible, often embedded insurance products, it really helps companies navigate the choppy waters of global trade more effectively. That boosts customer satisfaction for sure, but it also opens up entirely new revenue streams for the insurance providers who adapt. It shows the industry is capable of evolving.
So if we were to kind of wrap this up, summarizing our deep dive today,
Okay.
it seems the future of marine insurance, based on this research, is clearly digital, it's definitely adaptive, and maybe more essential than ever to global commerce.
I think that's a fair summary.
Hopefully you listening now have a much clearer picture of this market that's, so vital but often operates almost invisibly.
Yeah, and maybe just one final thought to leave people with. Building on everything we've discussed,
Please.
given how complex global supply chains are getting and how fast technology is moving, maybe we should consider how the very definition of insurable risk in shipping might keep changing in ways we maybe haven't even thought of yet.
Interesting.
What completely new types of coverage might need to emerge, and for what kinds of scenarios that seem, unforeseen right now as the world of trade continues to evolve.
That is definitely food for thought. A complex and clearly ever fascinating industry indeed.